New antenna data highlights how SVOD is maturing and how bundling is critical. Nielsen's data reveal potential TV audience shifts due to the just announced Warner Brothers Discovery Paramount Skydance deal. Listen on.
Welcome to this week's edition of Inside the Stream. This is Will Richmond from Video News, and Colin Dixon from N-Screen Media is with me. Colin, aren't you glad you were not shoveling out 3 feet of snow like we were on the East Coast earlier this week?
Aren't I ever, Will? Oh my goodness. Are you done digging out?
Yeah, pretty much done digging out. Actually, it's now kind of warmed up and starting to melt off a little bit. But yeah, that Monday blizzard was something that I don't think I've seen in quite a few years. It's been a little while since we had that amount of snow, and also the wind just whipping everywhere. So hopefully we're not going to experience another one of those this winter. We've already had our share of snow.
Yeah. We had a sort of mini blizzard here in California about a week and a half ago. And of course, you probably heard about that awful avalanche in the Sierras that killed all those people, which was a real disaster. But nothing, I think, certainly the weather wasn't as bad, I think, there as in the East Coast earlier this week. Yeah. Glad to hear that you're digging out. We've got a couple of broad topics we're going to talk about today. We've got some great new data from antenna that we want to talk about, and also, we're going to take a look at Nielsen gauge data and its implications on WBD and the bidding battle there. But I think we're going to start with antenna, right?
Absolutely. And of course, we track the antenna data pretty closely each quarter. They're always just incredibly valuable in the data that they share on the market in general and on specific areas of the market. So this quarter's report was, as past first quarter reports have been, about really what's happening with premium SVOD. And the picture that the report tells at a high level is that the market is maturing. And I think we've known that now for some time. And this data really supports it. Overall subscription, premium SVOD subscriptions in Q4 2025 were up 7%. That's down from the plus 12% that they were up in Q4 of 24. And that was true at the gross level and also at the net level. So there were 27 million new subscriptions started year over year in Q4, but only, according to Antenna, only about 18 million additions year over year at the end of Q4 25. So kind of see the market slowing here, and also in the spirit of the market maturing, also seeing churn rates stabilizing. So 4.6% weighted average churn rate, 4.6% in December of 25. That compares with 4.8% in December of 2024. And influence on that actually is that Disney Plus and Hulu were sort of outliers in Q4 due to the Jimmy Kimmel incident. They had much higher than usual churn, 7.8% and 9.6%, Disney Plus and Hulu. So those numbers influenced the overall market. But generally speaking, looking at the chart that Antenna included on churn rates going back to January 2023, it's pretty stable. The market does seem to be maturing. So we'll talk more about the specific events that are driving growth in a second, but I don't know if you have any comments about what I've talked about so far, Colin.
Yeah, so I think this is probably no surprise, and it probably won't be a big surprise for our listeners, Will, that the market is indeed maturing. We really switched from a growth market, so the penetration of of SVODs, I think, has the growth in those penetration has really slowed. Last time I looked, it was 87%, and it hasn't moved much from there, which is, by the way, actually deeper than the penetration of traditional pay TV ever got. Most of this is in people adding new subscriptions. And so it would kind of makes a lot of sense that this would slow quarter over quarter now that so many people have access to so many subscriptions already. There might be a couple of other impacts going on here, Will. One is the advent of pay TV operators bundling in all of the ad-supported tiers of SVODs. They don't bundle them all. They're only the ones that are coming from the broadcasters that they have existing relationships with. So that would be things like Paramount Plus and HBO Max and Discovery Plus and Peacock. Those are the ones that are getting bundled in here. And I think this might be having some impact as well on this slowing number. Certainly, I know a couple of them have been boasting that there have been quite a lot of, quote, activations through these bundle arrangements with Charter and DirecTV, etc., that they're seeing pretty good uptake, people actually going over and activating those. And those activations, of course, don't show up in the antenna data because the antenna data is primarily based on transactional data in credit cards, etc., so antenna wouldn't have a view to them. So it could be that the actual rate of new user acquisitions for some of these services is a little bit higher. But again, I think it's probably pretty sensible that we're seeing this settling down of new subscribers to these services.
Yeah, I think that's fair, and we'll talk about the impact of bundling here in a second. But I think also worth noting how Antenna calls out the role that big events, both sports and program events, have on acquisition, really concentrating the days of acquisition that occur. No surprise, Black Friday is really peaking as a day of acquisition, for SVOD services. And they sort of show the trend of what the top 10 sign-up days look like over the last 3 years for all of the SVOD services. And it's either flat or up for everybody. Peacock, huge surge, others up as well. And I think what we're really seeing is that, just like all retail, the decision to subscribe to an SVOD service is very much holiday driven and very much promotional driven. So that's really making the meaningful number of acquisition days fewer and fewer. And Q4, of course, itself has grown. Antenna is saying that 31% of acquisitions now happened in Q4. That was up a smidge from both the prior year and the year prior to that. So concentration in acquisition days as well.
Yeah, I think I have a feeling that this is sort of a double effect going on here, Will. You're not only getting really good offers on Black Friday from some of the providers, they're also announcing some of their holiday programming at the same time. So, you're getting come-ons from what looks like very interesting new programming coming at the same time as you're getting an offer for a decent discount on subscribing. And so I think that might be the dual effect. And it's sort of, the data really does seem to suggest here that Q4 is becoming a pretty big part of the acquisition strategy or the growth. If you're going to pick up subscribers, Q4 is the right time to do it, right? That shows up in the volatility data as well, right?
It does. And the Antenna said that half of all net subscriber ads over the past 2 years have come in the fourth quarter. And to your point, it's interesting. There's a chart that shows what the total gross ads, total net ads, and cancels are over the last 8 quarters. And it's remarkably consistent across those 8 quarters. The only from one quarter compared to the prior year's quarter. The only one that's really an outlier is Q3 of 25, again, that was driven by the Kimmel issue. Antenna said that Disney Plus, Hulu, and Max, which of course are bundled, very popular bundle we'll talk about in a moment, lost almost 9 million subscribers just in September around Kimmel. A lot of those people obviously came back. But, to your point, volatility has really, a lot of it has been evened out. If you look, just as an example, Q1 24 versus Q1 25, about 5.7, 5.8 million net adds. Q2 24 versus Q2 25, 4.7 million, 5 million. Q3 I just talked about, and then Q4, 13.3 million net adds in Q4 24 and 11 million Q4 25. So relatively stable acquisition pattern over the last 8 quarters with that Q3 exception.
Yeah, and as I said, this really does show that Q4 is becoming much more important. Back in Q4 2024, 13.3 million net adds, and the same for Q4 2025, 11 million net adds. And that's as opposed to, as you said, with the exception of Q3 25, usually net adds are sort of in the 4 to 6 million range over that entire period. The interesting thing, though, is it does seem like at least it was quite a volatile quarter. Q4 was quite a volatile quarter overall, with 42 million cancels and 53 million ads. So that's a lot of cancelling and adding going on in the Q4, and that I think that really reflects another thing that's going on here, Will, and that is that people are cancelling another service before they sign up for a new one. So this is something that I think we also have been expecting, that people are really managing their subscriptions pretty carefully now, and they're unafraid to cancel a service before they pick up a new one to keep their overall budget in check and keep it within whatever their specified limits are.
I think that's a fair point, Colin. And then I think just we'll cover one last item related to the antenna data, which caught both of our attention, which is Antenna noting that in Q4 25, total premium SVOD subscriptions reached 264 million, and they estimate that those in bundles accounted for 27% or 71 million of those subscribers. That's actually double the rate of 2 years ago. Q4 23, there were 14% of subscribers in bundles. Here we are 2 years later, and double, 27% are. So bundles have become a big deal. Another interesting data point, signups in Q1 of those with bundles was 4.3 million. Flash forward to Q4 of 25, it was up to 20 million. So we see lots of new people coming into the market via a bundle, and they call out the Disney HBO Max bundle as being the kind of the big success story here. And amazingly, 77% of all Disney Plus subscribers in Q4 2025 were in a bundle. 77%. That's pretty amazing. And total Disney Plus subscriptions were 40 million in Q4 25. So they continue to grow number of subscribers, but really the bundling idea has really driven a lot of that.
It really has, and I don't think this is a big surprise, Will. One of the interesting things in this diagram, and by the way, we'll post the link to where you can pick up the report from Antenna when we post this podcast. So just come to Will and I's site and find the posting for this episode of Inside the Stream, and you'll find the link there. The interesting thing here is that they show that Disney standalone subscriptions fell to about 23% of total subscriptions in Q4 2025, from 60% all the way back down in Q1 2023. But the increase in the Disney Plus Hulu Plus bundle, well, that is now 37% of total of subscriptions by plan type. And that's the Disney Plus and Hulu bundle. And I will note, I'm on that bundle too. And I don't know, you'd have to struggle to not go for that bundle over the individual services, because it is only $1 more than the individual service. So both Hulu and Disney Plus cost the same these days. I think that's ridiculous. If you're subscribing ad free, I think it's like $17 a month or something like that for the individual service, and it's only $1 more to get both of them ad free. And I think it's the same dollar more if you go for them both with ads. So when you've got a deal like that going, I mean, come on. Even I, who am not a big Disney fan, I'm going to find something to watch that's worth that $1 a month. So I think when you've got aggressive bundling going on like that, yeah, it makes a big difference. And the other thing I should mention here, there's a dual benefit, of course, to the bundle, and that is that retention is just much better on the bundles. Looking at the Disney, you mentioned the Disney, Hulu, HBO Max bundle, retention on that is great. After 12 months, 59% of people are still around who signed up for that. So, that means the average customer lifetime there, 59% of people stay with it for 12 months or more. But if you look at the retention for, say, HBO Max, it's only 28% after 12 months. And Disney Plus is only a little better at 31%. So this is a huge impact, I think, on retention. So it's like it's just a double whammy, Will. It's not just a question of getting people to pay a little bit more for more services. They pay a little bit more because they stick around way longer. So that's a real dual benefit there.
So I think net here, Colin, we can safely predict we're going to see a lot more bundles in the future, right?
I think we can, significantly here. I should mention, we'll return to this, but Netflix, who does have great retention, it's about 53% according to the antenna data. 53% of people stick around for 12 months or more after subscribing. They aren't in any bundles, and that is really significant fact, because they could really benefit from maybe being in bundles and boosting their retention rate up. They could gain as much as 5% on retention rate if they were to do that. And that brings me to, there was one other chart that I think we should mention, and that's the chart on page 21. That really emphasizes the benefit of or how powerful bundles have been for Disney, right?
Absolutely. I mean, adding to what we've already talked about, 96% of Disney Plus subscribers signed up in a bundle. 83% of Hulu signed up in a bundle. So, there we see the alignment between those two services. Conversely, Peacock, only 7% of their subscribers signing up through a bundle. So, yeah, I think we're making the point repeatedly that Disney has cracked the code on the importance of bundling, and others are still trying to figure it out.
Still trying to figure it out. And if you're wondering what bundle are we talking about for Peacock, both Will and I didn't notice that they announced a bundle with Apple TV in October of last year. So you can get Apple TV and Peacock in a bundle. And that sort of didn't hit either of our radars. So, and it's not making that big an impression either. So maybe that's some to-do work there for the folks at NBCU with Peacock.
Okay, well, let's flip over to the next subject, which we were going to talk about Nielsen data. But just as we're recording here, Colin, we both just noticed the news that Netflix has withdrawn from the battle to acquire Warner Brothers Discovery. So that means it looks like Paramount Skydance is going to prevail with their latest offer that they just submitted a little while ago. And so we're going to talk about the Nielsen numbers, but what's your quick reaction?
Well, my quick reaction is Netflix was probably very wise not to raise its offer. I think Paramount has offered more than WBD is worth. But maybe that's a topic we'll get into in next week's podcast in a little bit more detail. But Netflix sticking to its guns. It knows what it thinks the value of those properties are. It didn't want to increase its bid to take on the TV channels, and therefore it's backing away from doing it. So more power to them. I think sticking to your guns is the right thing to do here.
Yep, all good points, and we will probably dive further into this next week. But let's just talk about these Nielsen numbers. I think it's valuable to try to understand what this acquisition now is going to mean in terms of shifting the shares of both streaming as these companies come together and also TV time. So you were looking at the Nielsen's latest The Gauge report.
Yeah, and it looks like January was a little bit better month for traditional TV. Will it broadcast TV increased its share by about 1%, and and streaming decreased its share by about 0.5%. So that seems to have been the impact of the NFL playoffs there playing out. That was drawing a lot of people to traditional broadcast TV, watching those games. And so that was very helpful. In addition, what Nielsen does here is they also display the share of TV time by distributor. And this is always, kind of interesting data, because it doesn't just take into account one, either streaming or broadcast TV. It takes into account the whole picture. Now, YouTube is still in the lead here with 12.5% share, and of course that includes no broadcast. But Walt Disney is second with 11.9%. The interesting thing here, though, Will, is we're going to get a hint of what the combination of Paramount Global and of Warner Brothers Discovery is going to do to this particular picture. And we'll look at streaming as well in a second. So Paramount Global has about an 8.2% share, according to Nielsen, of TV time. So that's including all of their cable, broadcast, and streaming assets. And Warner Brothers Discovery has 5.5%. So since this is going to be one company at some point in the next year, we assuming it gets regulatory approval, and who doesn't believe it won't because of the cozy relationship of the Ellisons with this administration. That would give Paramount Skydance, Warner Brothers Discovery, that would give them a share of 13.7% of total TV time, which is higher than YouTube's 12.5% and Walt Disney's 11.9%. Now, this has less of an impact on streaming. So if we look at the streaming data, what we would expect to see here is, this is based on January numbers, Paramount had 2.3% share of the 47% that was devoted to streaming, and Warner Brothers Discovery had 1.4%. So presumably the combination of Paramount Plus, Pluto, and HBO Max and Discovery Plus, when you add all of those up, you're going to end up with something like 3.7%. That is still behind Prime Video at 4.1%, Disney 4.9%, Netflix 8.8%, and YouTube, of course, at 12.5%. So it does help Paramount a little bit in streaming, but it really doesn't help it nearly as much in streaming as it does in its overall share of TV time by them grabbing these TV stations. But I got to say, those are backward-looking deals, aren't they? Don't you think that this, in a way, Paramount Skydance's bid is kind of backward looking because they're so keen to hang on to those broadcast properties?
Well, on the surface, the upside for them combining the TV channels certainly seems greater than the streaming benefit, as you just pointed out. And, we know elsewhere in the industry, companies are spinning off or selling their cable TV network assets. So this would sort of fly in the face, although it does kind of remain to be seen what Paramount Skydance decides to do with the cable network portfolio. They could very well spin that off as well. So too early to tell. But, to your point, streaming is obviously where the growth in the market is. This nudges up their combined share, no question. But as you point out, it nudges them up much greater on total TV time, which, of course, includes broadcast and cable. So that's a declining business, and we obviously need to wait and see how they're going to, leverage these assets. One thing, just going back to our prior discussion about antenna, is that maybe there are going to be some new bundling opportunities between Paramount Plus and HBO Max that we haven't seen yet that could help bump up their combined share beyond that standalone addition that you just took us through.
Yeah. I definitely think we'll see some bundling there, Will. I just wonder whether they'll take the Warner Brothers Discovery approach and try and slam everything into one service, which we saw, well, that kind of wasn't that successful, really, was it, at Warner Brothers Discovery? I wonder if they'll end up doing that. But there is one thing here that is kind of interesting, and that is of course, now Netflix doesn't have the opportunity to do a bundle with HBO Max, which I think would have probably been pretty beneficial because, as we saw from the antenna data, bundling really does seem to help to retain people. So that would have enhanced, I think, Netflix's ability to retain customers over the long term, even longer than the 12-month period that 12-month window that antenna was giving in that data. So it does kind of restrict Netflix in that respect, but maybe we should leave our discussion at this, Will, because there's obviously a lot of other implications. As I say, maybe that's a discussion for another day.
Agreed. A lot of news here, Colin, that I think we're all going to be digesting in the coming days, and no doubt we'll have more to say about this next week and the weeks to follow. But it's been quite a journey here, a lot of twists and turns. And
it has indeed, and I have a feeling that there's going to be a lot of people with a lot of opinions that are going to try and put another spanner in the works of this deal, that they won't see this going to fruition. But I guess we'll have to wait and see over the next year what other twists and turns can be thrown at us.
Okay, well, let's leave it at that, Colin. Great talking with you through all these issues, and thanks everybody for listening in, and we will see you all again next week.
Inside the Stream is a production of In-Screen Media and Video News. All rights reserved.